Hello everyone, welcome to JAIIB CAIIB English Medium. My name is Aarti and I hope you all are doing good. So this is our target series where we are completing your AFM most important topics through this series along with practice. So if you're targeting to clear November 25 in your first attempt, what you need to do right now, you need to subscribe to our channel, and along with that you can share this channel with your fellow bankers, with your colleagues who are also planning to give JAIIB for this upcoming 25 cycle. So let's start today's session. So today we are going to talk about Unit 4, in which we are going to talk about important topics. Along with that, we are going to solve some numericals as well. So let's start today's session. So as the name is capital structure and cost of capital. Yes, so first thing we need to understand that as a business, when we are going to use this thing, yes, capital means your funds. Yes, understand one thing here, capital means your funds. So what structure we want to create for our funds? Yes, now if I say that if we are starting any funds, correct, so you require money for what? You require money to purchase all this long-term assets, yes, like non-current assets like building, machinery, yes, plant, equipments. You will purchase all these things to use for long term, yes, to use for more than 12 months. On the other hand, whatever business you are starting, so for that you are purchasing raw materials, finished goods, you are preparing and you are selling to your customers. Along with that we have cash. So all these things are your current assets. But for doing this operational activities, yes, like manufacturing, selling, yes, or purchasing your long-term assets, we require funds. We require funds. Without funds, you cannot purchase, you cannot manage your business. Yes, so ultimate thing for our business is what? That is your funds. Now, how you can arrange this funds? Suppose if I am starting my business, so first thing what I will do, I will see how much money I have. Okay, first I will use my own saving. Yes, I will use my own saving. Then afterwards, I will ask to my family members if they contribute in my business or not. After that, what I will think, I can take a bank loan also. Yes, I can take bank loan. I can ask to my friends also. Yes, so all are the ways to which I can arrange the funds. Yes, but there is two things in our business as a funds that we need to understand. Your fund, which your owner is giving to your business, or that is loan part. Okay, so majority of the times your funds are divided into these two parts. Yes, so funds are divided into these two parts, that is your owner fund or loan amount. These are the two ways. Okay, when I'm using my own source, that is my owner's fund. Yes, or if I'm sharing my company's ownership or whatever members are contributing to get that membership, that is also they are going to be known as owners. So one is your owner's fund and one is your loan amount. Okay, loan amount means when I'm borrowing from my friends, family, or if I'm borrowing from any particular bank or this NBFCs or any party. Okay, so that is loan amount. So we call this owner fund as your equity. Means when you share ownership, that time we call it as equity. On the other hand, when we're talking about loan, means when we're talking about debt. Yes, so whatever borrowings you have done, that is your debt amount. So funds are going to be part of two things, equity and debt. Okay, equity is when you are sharing ownership, debt when you are borrowing from someone. So this is how you can arrange funds for your business. Yes, now in this we need to understand capital means what? Capital means funds. Yes, and how you can arrange these funds? Just now we have seen two sources. Source number one, you can use your own funds, that is your equity, or you can borrow, that is your debt. Yes, you can borrow, you can do the borrowing, that is your debt. So here funds are of two types, equity and debt. Okay, but in what amount we are going to bring your debt amount or equity amount, that we need to understand. So what is this capital structure? See, let me give you one example here. Suppose here is your Reliance company and here is your XYZ company. Okay. Now, in Reliance company, they are saying the equity portion, okay, total is your 100% always. Now, in this Reliance company, equity portion means Ambani's. They are the owners, yes, they are the founders. So, they have contributed in this Reliance industry, suppose 70%, and debt they have taken, that is 30%. Debt means borrowing, okay, they have done only 30%. On the other hand, if I talk about XYZ company, in this company, the equity is only 40% and debt from different sources they have taken 60%. Yes, means what? Suppose a total fund they both the company requires, that is suppose 10 lakhs. Okay, both company wants 10 lakhs. So how Reliance company arranged this? 7 lakhs Ambani's invested and 3 lakhs they have borrowed. On the other hand, if I talk about this for XYZ business, so owners contributed only 4 lakhs and they have borrowed 6 lakhs from outside. That is debt amount. Now, after seeing these two companies, Reliance and XYZ company, now my question is, which company is going to be in a higher risk? If I ask you to invest, okay, in which company you will never going to invest? Tell me, Reliance or XYZ? See, I know Reliance is a famous company. We know their past, but we don't know about the XYZ. I'm not asking from that point of view. I'm asking based on this investment. Ambani's are investing 70% and debt they are taking 30%. On the other hand, XYZ. Achha, leave XYZ. Let's take Tata. Okay, now you know Tata company. Okay, now you know both companies past. But now I'm asking, in which company you are going to invest? Just think and tell me the answer based on this equity and debt. As a banker, to whom you will sanction loan first? If both are in a equal net worth, yes, both are doing the same work, then which company you are going to issue first loan? Of course, they Reliance, because risk is less. Now, why risk is less? Because the majority of the amount is invested by their owners. Yes, so here the risk is less compared to your company, Tata. Yes, so the chances of investment is going to be with Reliance Industry. So this structure, you know, this debt and equity, this is the structure. Structure is what? Owner, or you can say equity contribution is 70%, debt is equal to 30%. This is the structure. This is structure of Reliance Industry. Okay, and now can you tell me what is the structure of XYZ company? The structure is owner's fund is 40% and debt is 60%. This is the structure. Okay, that in a company, how much we have borrowed and how much we have invested as a owner. So this is what structure is. Correct? So the long-term money required by the firm is known as the capital. Okay, the funds capital structure referred to as the proportion of debt equity in the total long-term funds raised by the firm. If I talk about Reliance Industry, okay, if I talk about Reliance business, so how much they have raised to the debt, that is 30%, and how much through the equity, that is 70%. Okay, that is 70%. So here the long-term money can be from two sources. Just now we have seen, again we are repeating, from equity, money of the owners, or debt. Debt is what? That is borrowing. Okay, so this is about your capital structure and that meaning. Now let's solve an illustration based on this. A firm starts its business by raising total long-term fund 500 lakh to meet its requirement, equity capital 200 lakh, debt capital 300 lakh. So here we want to start in business, and what we have decided, the total fund we want 500. Yes, this is the total fund we want. Now how I will arrange this fund? I will take the owner's amount, that is equal to 200, and I will take debt amount, that is equal to 300. Yes, and if I add this, this is my total fund. Now here, if I want to know the proportion, of each funds, yes, if I want to know the proportion of funds, How I will do it? I will take, suppose, first equity. So I will take equity amount divided by 500. Yes, equity portion divided by total fund into 100. So can you tell me the answer? What is the proportion of equity here? 200 divided by 500 into 100. So this is your 40%. This is your 40%. Now can you tell me what is the proportion of debt? Again, do the same thing, 300 divided by 500 into 100. So that is 300 divided by 500 into 100. This is a 60%. Yes, so this is how we calculate proportion. Okay, this is how we calculate proportion. Or you can also go with this if you want to know about, suppose, equity. Okay, equity proportion. You can subtract 1 minus D. Suppose let's take, only 1 is your total. Okay, 1 means this is your total. So 1 minus, what is your percentage? You can write 60% or 0.60. Yes, you can write 100 minus D percentage or 1 minus 0.60. So this is 0.40 or this is your 40% if I represent in percentage. So this is how I can also calculate equity proportion. Same, I can calculate debt proportion. 1 minus equity. So 1 minus, if I see equity side only, 0.40. So your equity is, debt is 0.60. Or you can say this is your 60%. Yes, this is your answer. In case they're asking debt proportion and giving only equity side, and if they're asking equity proportion, only giving debt amount. Okay? And if they're asking proportion for both the things, then you need to use this left side calculation. Okay, chali. So here we have understood about the capital structure and how to calculate the proportion based on that structure. Now, we have one more small topic, that is leverage, gearing. So in the capital structure of a firm, if the ratio of the debt capital is high, it's called highly leveraged or high geared firm. Means what? If you're taking more borrowing amount than your equity amount, then your firm is known as high leveraged geared firm. On the other hand, if the ratio of the debt capital is low, it is called a low leveraged or low geared firm. Okay, so this is what about leverage. If you're borrowing more, then you are going to be known as high leverage firm. Acha, let's solve one question here. Let's see how many of you understood this part. Again, I am taking the same example. This is your Reliance and this is your Tata. Okay, why I'm taking again and again the same example? Because in exam they can ask questions based on analytical perspective also. Okay, so that's why we need to understand what the concept is, practically also as well as theoretically also. So just now we have covered your theory part. Now let's apply it. So if I say this is your equity, now you know what is equity, yes? And if this is your debt, you know what is debt? Debt is your borrowing amount. Equity is what? Equity is your owner's amount. So suppose in your Reliance Industry, equity is your 80% and debt is your 20%. Okay, on the other hand, if I'm tell you about Tata, equity is around 70, sorry, equity in under Tata, that is around 35% and debt is around remaining that is 65%. So now my question is, which is going to have high leveraged or geared firm? Tell me. Reliance or Tata? High leveraged or highly geared firm means in which you have high borrowing amount. है ना? High debt capital means high borrowing amount. So which company is having high borrowing amount? Reliance or Tata? Correct answer is your Tata. Okay, so Tata is known as highly leveraged firm, whereas Reliance is known as low leveraged firm. Correct? So this is one small topic based on your leverage and gear. Now we have one more small topic. These are very important from exam perspective. That's why I'm completing, yes, subtopics. Now coming to the next important topic, that is weighted average cost of capital, known as WACC. Yes. So here just now we have understood the meaning of capital. Capital means your funds. Okay. How you can arrange this funds, equity plus debt. Okay. Now for arranging these funds, I need to incur some cost. Yes. Like for issuing equity. Yes, I need to pay dividend on that. I need to incur issuance cost. Yes. So all this is what cost for company, cost for company. Whereas if I am taking a debt, I need to pay some fees. Yes, processing fees, all these things. All these things are again what cost for a company for taking a loan, for taking a debt. So if I want to know what is the total cost I incurred for taking funds, if I want to know what is the total cost I need to incur for taking total funds, then I am going to use this topic, that is WACC. But can I just go and directly add it? The answer is no. You cannot take direct addition. For this particular purpose, for knowing the cost of capital, we need to go with the average. We need to take weighted average. We need to give weights and then we are going to calculate. Okay, so WACC is what used to determine the cost of each part of the company's capital structure. And generally we have seen just now proportion of equity and debt. Okay. Now, it represents the rate of return that a company must pay for all of its financial sources such as debt and equity. So, your formula that you need to use for calculating WACC is proportion of debt. Just now you have seen proportion of debt. Yes, you will calculate in percentage. And if tax rate is given, if tax rate is given, subtract 1 minus T. If not, then ignore. Okay, then just ignore it. And cost of debt, again they are going to give you in your question if they're asking WACC. Otherwise, again we are going to learn how to calculate cost of debt in this unit only, but not in today's session. You need to add, okay, after giving the weighted weights, you will add to the cost of equity into proportion of equity. Proportion of equity, just now you understood how to calculate this proportion of equity. Okay. So here you will take that proportion in percentage and the cost of equity. Again, they are going to give you in questions. Otherwise, we have again 4 to 5 formulas for calculating cost of equity. Again, I am not covering that part in today's session. Chali. So let's start and use this formula. A company has the following capital structure. If equity is 60 lakhs, cost of equity is 12%, debt 40 lakhs, cost of debt 10%, tax rate is 30%. Now, first, let me write you the formula. Cost of debt into proportion of debt plus cost of equity into proportion of equity. Okay. So let's calculate first about the proportion. How to calculate proportion? How to calculate proportion? First step is calculate total funds. What is your total funds? Add your equity plus debt amount. So 60 plus 40. So this is going to be your 1, 2, 3, 0, 0, 0 and 0, 1. Yes, this is your total. 1 crore is your total funds. Now, second thing, let's calculate the proportion of equity. So 60 lakhs divided by 1 crore into 100. 60 lakhs divided by 1 crore into 100. That is a 60%. Yes. And for the third, that is proportion of debt. 40 lakhs divided by 1 crore equal to 40%. Now let's put the figure, because already we know the cost of debt, that is 10%, into proportion of debt, how much, that is 40%. But remember here tax rate is given, so 1 minus 0.30 plus cost of equity, that is 12%, into your proportion of equity, that is 60%. So if you solve the first bracket, 0.7 into 0.4, yes, just wait. So solve the bracket first. 0.7 into 40% into 10%. Then 60% into 12%. So your total WACC is going to be 7.48%. Please everyone cross check it. Hana? Once this up to this point we are correct. Just cross check the answer once. Okay. So this is your WACC, and this is how we need to calculate. Okay. Now one question is homework for you. Just remember here we have the preference shares. This is one of the again way to which you can through which you can borrow the amount. Okay. So this is your homework question. Just I am giving you the formula. You just need to put the amounts. Cost of debt into proportion of debt plus cost of preference shares into proportion of preference shares plus cost of equity into proportion of equity. Okay, use the same way for calculating the proportions. Okay, just remember you have one extra thing, so you need to add that part. So total funds here you are going to take, that is 20 lakhs plus 10 lakhs plus 30 lakhs. Yes, so 50, 60, 60 lakhs. Now I hope you can calculate, and this is your homework question. Everyone try this and share your answer through the comments. Okay, now one more thing, that if you want to join my upcoming batch, which we are going to start from 2nd August, okay, means we are going to start in our August month only. So you can join through this particular officers batch, and for that you can use one coupon code, that is Y895. This is our coupon code. Through this you will get maximum discount. Okay, along with this, if you purchase Mahapack, you will get double validity. Now why I'm saying this, see, in today's session you must have observed we have seen small topics, but we have more numerical part. Okay, so if you want to cover that numerical part also along with the practice, you need to join it. See, because so many bankers, you all are from non-commerce background. Okay, and if you think just by taking one session or just by doing one day classes you can clear your AFM, no. As a non-banker, you need to start early, you need to prepare early, because things are not easy. Okay, and for further queries, further doubts, you can use this Telegram link and you can join my Telegram group. Through that also you can discuss with me. So that's it for the day. So let's find up this session. Thank you everyone for